Okay, I'm gonna pause this for just a sec. Okay, yeah, I'm glad to see your emojis here. And I'm glad that I'm able to do this kind of stuff intraday, especially in this kind of market. The like the strategy sessions at the end of the day, excuse me, strategy sessions at the end of the day are great. That's kind of how I've always done them. But kind of times have changed a little bit, and I've changed. I got a lot of stuff going on, but it's not just about that. It's that I see more things than I used to because I've been freaking trading for almost 30 years. And I do realize that a lot of times it's just good to kind of have things intraday if I can do them, as long as I'm doing them in a way that helps people. I mean, most people are working, and you're not going to be able to look at this until the end of the day. But when I can, I'm going to just kind of start spitting these out when I can do them. I think it kind of, frankly, it kind of makes my life a little more interesting. I'll be honest. It'll put this in the "it's all about me" category, at least a little bit. But I just think it helps. I think it helps with the value here. So, from what I can see, um, you guys agree. So you're going to see me doing more of these things intraday as opposed to at the end of the day. So with that said, I'm going to get I'm going to get rid of my guitars and my face here, and we'll just share the screen and get rolling here. Let's see. Okay. Um, so I'll just kind of get right into it. This is really important. Cash is a position, you guys. I want you to always be mindful of that, that we don't get to make money every day. If you're trading options like the way Andy and Sam do, you can be making money every week. Going forward, it's probably going to be, well, actually, I'll tell you now. Next Wednesday, I'll be recording a strategy session, the typical thing at 3 o'clock Pacific time, 6 o'clock Eastern. And Andy's going to join me, White Path. And we'll be talking about it's going to be the typical strategy session like this, but Andy's kind of my guest. And he's going to be talking about some option strategies that work particularly well in this kind of market because there should be a lot of numb hands out there where you're just kind of sitting on your hands doing nothing. But with options, you can be skimming money off the top with trading with options that are going to expire worthless, stuff like that. So anyway, that's for next Wednesday. But I just want to emphasize right now that cash is a position, and you need to be aware of that, but also be mindful of the kind of market. Be mindful of the kind of market that we're in on any given day. And what I mean by that is, I'll get to the charts in just a second, but we can have a market looks like it's going straight to zero, and people kind of gradually start to give up hope. And then pretty soon they're really despondent. They see their account values going down. They see all the stocks that they're in falling, and they get really, really pessimistic as each day goes by. But then there comes this magical moment in time and on the chart where they reach like this maximum pessimism. And it just kind of so happens that it's right when the market rebounds. And so we're seeing, again, we'll look at it in just a sec, but we're seeing the S&P and the NASDAQ 100 pretty much bounce right off the 200-day moving average. And there are other stocks that are doing the same thing, and I'll go through a bunch of them. But be mindful of this. This is not going to be a V bottom. I don't think it's very wise to be saying like, oh, it's a rebound off the 200-day moving average. I got to go all in right now because my sense is what's going to happen is we're going to kind of grind around for a while. But it's important just to be in sync with the market at all times and then make any trading decisions that you have. And again, doing nothing is a trading decision, but then making any trading decisions that you have be based on what the current market is. So I want to look at this. Okay, just on Monday, 4 days ago, when we were on together on March 3rd, on Monday, the fear index was at 31. So we're kind of fearful, right? Market's going down. Today, it's down at 19. So there's a lot more pessimism in the market. Yesterday, it was even a little bit lower, and that kind of makes sense when you see that the charts are going to show that we're getting a little bit of a lift. So this fear greed index will tend to go opposite of the way the market's trading. Now, on the smart dumb money confidence index here, we're seeing that the blue line here, the smart money, is starting to get pretty optimistic. It's been going up for a while as the market's been coming down. But we're not yet at this extreme. Like anything over 0.7 or 70%, that's considered to be a real extreme level. And you can look back here where the smart money was up above 70, like around 75. That marked a really, really key low here. And then we're kind of off to the races here. Didn't get quite so much before we just kind of started to see a resumption of this uptrend. But where we can really kind of gauge what's going to happen in a big way is when we see this big wide disparity of at least 40. Now we're just at 30, 33. We want to see a disparity of at least 40, where then we really get the sense that the smart and the dumb money are so stretched that we're likely to see a move to the opposite side. Now I'm going to shut my video off because I got to move my camera. Okay. All right. I'm going to get to some charts here and we'll see what we can see. And by the way, if you've got any questions, if you got any questions, go ahead and share them. By the way, Jerry, glad to hear that. You're saying your intraday strategy session is must-see TV. I like that. I'll take it. Next time, well, I have showered and combed my hair, but next time I'll wear a collared shirt. But anyway, okay. So SPY. This is what we're seeing. This is a key trend line break, ladies and gentlemen. I keep wanting to say guys. I call our 3 female dogs guys. Hey, guys. But anyway, guys, so this is a key trend line break here. It's holding at the 200-day moving average. If you look at the weekly chart to kind of give you more of a secular uptrend kind of thing, you can see that the uptrend's still intact. This is at the in the upper right-hand corner. I call that the winner's circle as opposed to the penalty box down here. So this is still moving higher, and we've seen this type of thing before. But just look at this here. It has taken a while for the S&P to cycle, to go all the way through the cycle. That's 3 months here. But then once it rebounded, bam, it really, really took off. So here, we just kind of started like 3 weeks ago. And so this can grind around for a while. This can take us into May before we can expect a sustained uptrend. There's a lot of things going on I've been talking about this, and I'm not going to go into more detail. I'm not going to say it again because it's going to bore you guys. But there's a lot of uncertainty, like with respect to tariffs and all that. And by the way, here's the thing, just so you know, and this is a market thing. I know, like, oh, tariffs are going to cause inflation. Oh my God, the price of eggs and all that. Okay, bullshit. Um, yeah, some of the prices are going to go up, but what's really going to happen, and I'm not advocating for tariffs or against them. I don't know that much about them, but I do know this much. What's going to happen with tariffs is it's going to hurt the retailers. It's going to hurt those like Walmart, Target, uh, anybody who's selling tariffed goods, because what they're going to have to do, and this is the whole nature. And again, I'm absolutely not advocating for tariffs. It just seems like these days, for whatever stupid ass reason, it's become a political thing. But what happens is if you're if you're importing goods, tariffed goods, like the exporters, the people that are actually selling them, they're going to have to take a haircut. At the same time, those that are selling them, they're going to have to keep their prices low simply because there are other sellers of non-tariffed goods. And so it's a competitive thing. I didn't explain this really, really well. I acknowledge that. And again, I don't know that much about it, but I know this. If something's too expensive, people aren't going to buy it anymore. They're just not. And so what's going to happen? Well, the sellers really do want to sell it, even if people aren't going to buy it anymore because it's so expensive. So what are they going to do? They're going to go, okay, crap. Well, we're going to have to lower our prices. And then what does that do? Okay, they lower their prices. It cuts directly into their profit margins. And they're making much less money on their business. They're making their margins are shrinking, their profit is shrinking, it's going down. Now, why am I going into this? Because this is why it impacts the market. This is why, like, if I don't know what this chart looks like, Walmart, it's actually doing pretty good. Okay, so we'll look here at the daily chart. Looked pretty good here. At least it's kind of hanging on. But then as I look at it here, this could very well turn into like a head and shoulder pattern here, where this is the left shoulder, this is the high, this is the right shoulder, and this would be the neckline. So I could even say this is starting to be like a key reversal pattern. And if you are thinking about shorting a stock, if Walmart happens to come back up to the 50-day moving average and then starts moving lower again, this is where you'd want to short the stock with the stop right up here. Okay, I got kind of distracted with the technicals here. I hadn't even looked at this chart before. But the point is, Walmart is going to make less money on the products that they're importing from these companies, from these countries that are incurring tariffs. And so they're going to have to cut their prices. They don't want to have to put all the folks in the blue aprons or the blue coats at the front of the store. They don't want to have to put those folks out on the unemployment line. And so what they're going to be doing is they're going to be cutting into their profit margins. And investors hate companies that have shrinking profit margins because ultimately that's what really, really matters. And so these tariffs don't, I mean, yeah, they impact the consumer to a certain extent, but not as much as a lot of people think, and not as much as you'll hear on TV. You know, oh, the price of eggs. Well, if you kill 200 million chickens for no particular reason, price of eggs is going to go up. So don't look at that kind of crap. Just think about it this way. The consumer's the consumer. The consumer's been weak for a while. They have, no question about it. They have. But what really matters is how are the companies doing? How are your tickers doing? Stuff like that, like on holding. Okay. This is another, like, shoot, short it up here if it comes back up here. But all of these retailers, let's see what Nike looks like. Okay, well, this has been sucking for quite a while. The swoosh, you can invert the swoosh. But this is the type of thing that we want to be looking at, guys. We really want to be looking for companies that hopefully aren't importing a lot of things. I don't have any of those on my radar now. So don't get all excited. I don't have much except a whole bunch of observations about a whole bunch of charts. But the point is, now with having explained tariffs the way I've explained them, and anybody, you feel free to fact check me on that. I do not claim to be an expert in tariffs. Not my deal, but that's just what I understand from some of the research and reading that I have done. Is it's a retailer thing, not a consumer thing, and so that's why markets are trying to kind of figure out where all this stuff, where do we sort this out? Oh my gosh, Trump's going to put big tariffs on this. Oh, wait a minute. Nope. He's suspended them for a week or for a month until we get more guys in backpacks carrying fentanyl across the border, whatever the case may be. So we just don't know a lot of things. And that is why the market is the way it is. Markets hate uncertainty. And so we're giving back all of the election stuff. Okay, fine. But the next move, in my view, on Monday is higher. My suspicion is we'll come back. Probably, see if I can match that. Perfect match. Probably to the 8-day EMA. Like just enough to suck you in, get all excited, and then we'll see this. Now, will we see this? No. But we'll see this kind of chopping around a little bit. That's my sense. But with that said, I'm going to go through in a little bit. I'm going to go through some stocks to get to some stocks that if you're an investor as opposed to a trader, if you're an investor, you got big money accounts, and we have, we have some. That's why I look at this kind of stuff. A lot of the stuff that aren't really trades are great opportunities to buy, to take long-term positions. Okay, so we'll get to those in a sec. I'll go through the rest of them here. So NASDAQ 100, this has fallen below the 200, and that's kind of a big deal because the S&P really didn't do that. It's not closed below the 200-day moving average. Buyers have stepped in and said, okay, thanks, I'll take them. Back up the truck. The NASDAQ, not so much. It's still got some resistance here. The Dow Jones, for whatever it's worth, is doing just fine. The mid caps, doing just fine if you're standing on your head. IWM, same thing. And so when you see mid and small caps floundering like this, this goes back to what I've been saying. Right off the top of my head, this is what I wonder. Companies with little money, by definition, that would be a small cap stock. Depending on what their actual business is, don't you think they would want to be importing from China, from some of these other countries? They're not, you're not going to see a whole lot of made in America flags on the front porch of these companies. They want to be getting the cheapest goods they possibly can. And so my sense is that they would kind of be more impacted by the tariff situation. Again, like you heard it here first. Somebody else can come along and say, well, Fitzpatrick's full of crap, and I may very well be. But that's kind of one of the reasons that I'm thinking these small and mid cap stocks might be kind of weaker than usual. But I do know this, at the end of the day, as that stupid saying goes. At the end of the day, the reason why is not particularly important. We just want to know whether exchanging our money for stock is going to make us money. And right now, it ain't doing that. Okay. So let's look at our uh, former members of the active trade list. So stops do kind of protect you. They keep you out of trouble. So we're stopped out of this. This went all the way back down to test like 170. So we saved about 20 bucks if you held it all the way through the stop. You saved about 20 bucks. Now, this could be setting up, the way this is trading, could be setting up for a move to the upside on Monday, but this isn't really compelling. It's still lower than it opened. And so I say dash crash. And then way, no way. This was a key trend break. Again, it saved us money if you held this thing all the way until the suggested stop was hit. We get this big volume bar here. Now that doesn't even matter. This is a broken stock. It's going to need a lot of time to recover. I don't know when that's going to be, but if you're holding this, you're just kind of hoping for a miracle. And miracles rarely happen in the market. And when they do, they don't really happen to you. Okay. So Hood, again, stopped out of this. This is, look, still well above the 200-day moving average, but when a stock has run up like this and had a big move higher and a reversal, when it breaks the 50 and it hasn't before, then that stock really is kind of dead to me. And then Learn, Stride, again, stops, nice to have them because they will save you money. Stock gaps down at one point, is down clear into the 112s. Looks like it's trying to regain the 50-day moving average. But when you see this kind of thing, don't imagine that the stock's going to come up here and, oh, this is going to be a dragonfly doji. This is going to be a key reversal. I'm going to buy this stock. No, this is still down. This is still down over 5% from where it opened. And we only have like an hour of trading left on a Friday when most people are licking their wounds, leaving for wherever it is that they leave on a Friday. So you want to don't be holding stuff like this, because this is not that. Like this stock has a totally different character now. Okay, now stocks that you could be at least looking at, not trading yet, but some of the gold stocks they're still hanging in there. There's no kind of entry here for me. I have specific things that I look for with respect to entries. And this one, like this could be going higher, Agnico Eagle. It could be going higher here, but this just doesn't have the look that I like to see for a stock that I feel like has a lot of possibilities to go higher from here. It's just kind of squeezing and pulling back a little bit too high relative to the 50 and the 200-day moving average. Also, on this decline, the volume was actually, generally speaking, increasing. And what I like to see after a stock's run and then you're seeing this pullback, I like to see that happen on declining volume. We're really not seeing that. It's actually kind of the opposite, where it's pulling back on increasing volume and then it's kind of rallying on declining volume. So this may not fall. It may, but it may not fall. But I just don't see a big possibility for a big run to the upside. So anyway, let me, not that you have a choice, but I was looking at some of these stocks that for investors are probably giving you an opportunity. And I don't look at this as a trade like, oh man, I want to trade Amazon. No, I'm looking at it this way. Amazon ain't going out of business. You know, Lex Luthor, with the, I don't know, the pole dancing wife. Um, I don't know why I said that, but he's not going out of business here. And so we look at this as an investor. This looks like a really, really good time to be buying some Amazon. As a trader, yeah, you're going to buy it here. It might come up a little bit and then it kind of stalls out and you get bored with it and say, I don't know why I bought Amazon. And maybe it'll even go lower. Look what it did here. But what I'm saying is, and let me know if this makes sense to you guys, or if you're just looking for a zero DTE option trade or something like that. But let me know if me covering some of these potential buys is something that you want to see. So I'm looking at this and I like what I see. I'm looking at Meta. Okay. I see all the emojis, so I'm going in the right direction. All right. I like that. It's kind of fun for me to be doing things a little bit differently. So I look at Meta. This is a pretty sloppy, choppy chart here, but you can see on the weekly, this 20-week middle Bollinger Band moving average really does kind of hold things up. And so here, I can take all this stuff off. Yeah. So here, this is not the kind of buying opportunity that Amazon has given us right off the 200-day moving average. Once again, I'll say it, for an investor who's going like, I've always wanted to buy some Amazon to hold for a long time. This is my opportunity. Meta, I wouldn't put it right in that category, but your Zuckerberg ain't going to go out of business. Sociopathic geniuses rarely do. So, okay. And then Netflix daily chart. Again, this isn't going out of business. I know, what is it with love, Megan? I don't think that's going to save the this pullback here. But this is an opportunity again as an investor to say, well, look, I sure like this chart, and it's always been pretty darn profitable to be buying after there have been a few red bars, because then this uptrend resumes. And so that's what we're seeing here on Netflix. And then Apple, this really is just not my deal. This is all over the place. So this to me would be a no. Another one of those big caps, large cap, mega caps, whatever, is Microsoft. This would be a big no for me as well, because if you just look at this, I'm going to take this stuff off for a sec. You just look at this, it's come up here and it's just kind of starting to roll over. And we don't like the rollovers. We'll look at a chart of Microsoft. Okay. All right. So seeing all blue here, earnings, year over year quarterly revenues are increasing by about 10% over the last 3 quarters. So the quarter ended March 31st. This is from last year. You compare that to the year before, it jumped up 20%. You can compare these numbers here if you don't know how to read this stuff. So this is all good. Revenues are pretty consistent too. Not outstanding or anything like that, but it's Microsoft. And so then their gross margins, Microsoft, I don't really feel like is going to be impacted by tariffs. So their margins are really good. But if we look though at the weekly chart, we see this earnings line here, which I really, really like. It's been generally speaking on the ascension here mode. It's been moving higher. But if you look at what happened back here in 2022, it kind of flattened out. And at the same time, what did we see with the price? The price declines while the earnings line actually kind of goes down there a little bit. All right. And then finally, the stock actually prints a higher low down here and starts moving up, um, kind of anticipating an end to this and then starting to move more to the upside. And there's patterns within this big, long, whatever you want to call it. But now I'm looking at this as a key breakdown, like below 400. That's not a good look for this stock. So this would be one of those where if you say, oh, well, is this an opportunity to buy Microsoft? I would say, well, the market's open, so sure, you can do that. But I think you'd probably be able to get it at a lower price. And this isn't something that I would want to be buying at this point. I don't see this as a key buying opportunity. Whereas if you look at Amazon, see what I mean? It's kind of just it's got a totally different character. Um, okay. And so, and then also NVIDIA, this is a big nope as well. NVIDIA has a similar pattern here. Let me pull this back. Okay. You can see on the weekly chart, it's almost kind of hard to see the earnings line because it's running right up along with the price. But come on, you can do it. Yeah. Well, that was a little too much. Okay. But you can see like this is a really, really steep slope here. And then from here to here, it starts to taper off a little bit. And then it's tapering off a little bit more. So this is kind of flattening out. It's still really impressive, but this is starting to drift sideways. And so this is the kind of thing where you got to take note of this. And also just look here. Okay. On the earnings, quarterly earnings versus the same quarter the prior year, 455, 152, 103, 71. Okay, this is not a good look for a stock that's ramped up so much. Plus, it's got a relative strength rating here on Market Surge of 32. I'm just telling you, you should not be looking at this stock. It's not it's too early to be thinking about tax losses. I'll put it that way. So you don't want to be looking at this here. Now, stocks that I think are kind of bouncing off their key moving averages. We'll look here. This is another one, Globus Med. We've had this on before. Stops are a good thing. Shift 4 payments. This is a really sloppy chart, but whether you're buying any of these, guys, these would be total short-term trades here. Who knows what's going to happen on Monday? But I'm just pointing out some that they look pretty decisive as far as their rebounds here. And the Bank Core, I'm not sure that I think I covered this stock a time or two. Maybe not. Probably not. Typically, I draw something on it. But this looks like it can kind of be bouncing a little bit. And regional banks have actually been doing pretty good. So I think I already looked at Halo, Palomar, and AEM. So these are three stocks that at least bear watching. We'll put it that way. Now, Taiwan Semi, no. Intuitive Surgical, no. This is just a really, really crappy chart. Why am I showing you guys this kind of stuff? Because I want to show you stocks that aren't working, they're kind of high profile stocks, not all of them, but a lot of them are high profile stocks that people might tend to say, hey, well, I really like this stock. And you can like the stock, but do you like the chart? And do you like your money? So these are some that just like, they don't look like they're working to me. Now, Spotify, I was looking at this earlier today. This could be because it's like Icarus, it flew way too close to the sun up here. And then it's fallen back down. Like this had been the channel, broke through that to the upside. So now with that, we got to change the angle of the channel to kind of match what's happening here. So maybe we look at this. Now you got to connect three of them to really have a trend line as opposed to just the shortest distance between 2 points. So like this would be the trend line, the possible trend line. So this didn't come up to meet it. That's not a really good thing. And then it's fallen back here to the 50-day moving average. This has been a pretty nasty decline. Okay. And so look for a rebound here. And if you're the shortened kind, you wait for the stock to fall back below the 50-day moving average. And that's when you place a short trade with a pretty tight buy stop. Okay. So, all right. So guys, that's all I got. But we got a bunch of questions here. So I'm going to try to bang through them here. Okay. Would you, Manuel, you're asking, would you enter on a full position with the market the way it is? No, look, with checkpoint, so, like this is really good, but if you're thinking about buying this, I'll just say you're buying kind of late because this has had a heck of a run already. Relative, on this kind of chart, it's not like one of these super fast movers, but I don't think you want to buy here, certainly on a full position. The market's heavy. This is one of those stocks that's a total counter trend trade. I mean, it's crushing it. Rel excuse me. Pardon me. Relative to just about anything else. And I'm not really familiar with this company too much. I mean, I know generally speaking what they do, but you got to wait for more of a pullback on this. And then Verizon, like both of these are, I get what you're looking at. This is what, a multi-year high now, but it's really extended. And so there's no kind of setup on this chart. There's no real order in this chart that would give you this sense of, okay, I understand what's going on. This is a good buying opportunity for me. You'd just be kind of chasing this. Okay. So I hope that works for you, Manuel. Okay, then is that the one? Okay. Yeah. West. Not your typical trade. Mark says this is not your typical trade. Any thoughts on what this is doing? Okay, well, this had some kind of nasty thing. Okay, yeah, it was earnings. They reported earnings and they actually surprised to the upside here, but you saw what happened. So this was just this big, massive flush. If you want to, like you look at MarketSmith here, just real quick, you can see this earnings line has been drifting lower. And so that's not a good thing for this. And then fundamentally, I guess like here, if you call this a good thing, generally speaking, they're losing less money every quarter. Okay, so you can see this. It maybe next quarter will actually bump into the blue column here, but they're estimated still to be losing money. So this is not certainly. I don't think it's not like a stock that I would want to buy and hold. What you're seeing here, though, is I think just a big, massive flush, and the market saying like, "Wow, okay, this company ain't going out of business. I will take this. I'll buy this stock," and then it snaps back to the upside. This is it's been a great trade, not a super profitable one, but it's been kind of it's been a logical trade. We'll put it this way: when a stock falls and closes 37% in one day, and there's no fraud attached to it, you're probably going to see buyers come in. Okay. Um, okay. So, Mark, Verizon. Um, yeah, I mean, kind of see attached, in other words. So a couple of you guys are asking, 6% dividend yield. That's kind of nice when the treasuries down at 4.3. But again, this is just really volatile here. By the way, this could go higher. This could break out and go more to the upside. Um, but this is just a real, I, I got no, I'll put it this way. I have no edge on this stock one way or another. Okay, Vincent, let's see how much I'm going to laugh. SVIX. Okay. I'm not going to laugh at that. Um, what about SVIX for a short trade, for a quick buck or a small loss? Well, yeah, as long as the loss is small, I'm all for quick bucks. I'll make a quick buck as often as I can, as long as it's relatively legal or if I don't get caught. So now, I mean, that's hard money. That's really hard money. It's still trending lower. I think you'd kind of be hoping. Uh, and I'm not familiar with this at all. I don't know what the structure of it is. So, okay, and give me just a sec. I gotta kind of dismiss some of these questions that I've already answered, so I don't. Vincent, don't laugh too hard. I'm not gonna laugh, buddy. Well, I actually would, but anyway. Okay. Uh, Anonymous. Um, Dear, really nice uptrend. I mean, nice uptrend in this time frame, but think about it. The time to buy, the good times to buy are on these tags of the 50-day moving average. Higher highs and higher lows. So if you're long this stock, I might be, but if you're long this stock, you just ride it from top to bottom on this zigzag. It's 15%, less than 15%. So yeah, I mean, it's fine. If you've got kind of more of a longer time horizon, I would say. But nice to hold right here, but I wouldn't buy it. I would wait. Um, um, yeah, right here, right now. Yeah, I don't think it is. Again, I don't think it's a right here, right now. I think if it comes back and starts to look like this again, that's a right here, right now. No question. Okay. All right. Vincent, you're active, buddy. Um, Now this is really, really choppy. Um, on a longer term horizon, yeah, I mean, this is really, really hard money. It's just really, really hard money here. Um, Pay attention to this. Pay attention to this low here. This is really where if you're long the stock, you're probably kind of selling it here, not buying it. If it breaks out, look, maybe it'll run a bit more, but I think you'd be kind of, since you're just asking, yeah, for a longer trade. Okay, here's the thing, Vince. If you're saying, and listen to me, guys and ladies, if you're saying, like, okay, I want to buy this stock for a longer trade, meaning for a longer term trade, then think about it this way. You're not going to actually make money on it. In other words, reap any rewards for quite a while. You're not going to, for a longer term trade, you're not going to buy the stock at 84.41 and then sell it at 86 for a nice profit. You're saying for a longer term trade. But what that also means is if you're not able to make any money for quite a while on this, that's your plan, then why would you be eager to buy it right now when you know you're not going to make money on it for quite a while? But buying it right now means that you can't take advantage of any kind of a pullback. And so if you're going to buy this thing right now for a longer term trade, what you're saying is that you think the stock is just going to keep going up here. It's just going to break right through this and keep going. It's not going to come back and kind of fill this box at one time or another. So in my view, this is kind of the more likely scenario, is that at some point this would come back to a lower level and give you an opportunity to buy. But with that said, it's just not the kind of thing that I would look to for a longer term trade. Okay, Palo Alto. Yeah, this interesting. This is bugging me here. There. Okay. Yeah, this is interesting because it's testing the 200-day moving average and working well. So, yeah, you could buy this for I mean, if this is what you're looking for, as a trading kind of thing, I just want to keep a stop just a little bit below today's intraday low. But it's, hey, it's drifting higher. You're going to see some resistance right here around 200 bucks, but you can't, don't ignore the uptrend. And this is, as I've said, I really do feel like this is the year of cybersecurity. So I don't know what this is. I haven't looked at this CyberArk. Okay. So yeah, I mean, it's okay. And then, okay. Don't they say these high flyers can pull back 40% at times? Absolutely. Absolutely. The high flyers can pull, they can absolutely get bum rushed. I mean, they can absolutely get tanked. And this is, see, this is one of the conundrums of trading, one of the many. If you live in California, where you're giving virtually all your profits to Gavin Newsom or now Donald Trump, you have a choice to make. Like, if I sell a stock with a really, really nice profit, ultimately I'm giving more than half of that away. And so then it kind of pays to hold on to a stock. I'm talking investments, not for trading, but then it pays to hold on to a stock, even through these big pullbacks and rallies. You got to be really looking at the Bill O'Neill time frame, like the weekly chart. Like that's all this guy, God rest his soul, he ever looked at really is the weekly charts. And so Palo Alto would be one of these where, weekly chart looks like it's doing pretty well. Why not? Okay. And then McDonald's on a pullback, we'll just stick to the weekly. Yeah. I mean, I could see that. Um, what you guys are asking about here, these stocks, these are stocks to hold. I don't look at any of these as trading stocks. These are like I couldn't do anything with this. But if you're looking you've always, like, gosh, I've always wanted to own McDonald's. If it pulls back, sure, yeah, like you could do this. Okay, is it a good time to buy Halo? This is a real sloppy chart. Um, you guys are asking some really, I mean, they're good questions, but they're a little bit kind of hard to answer simply because I hear myself saying all the time, well, I don't know, could go higher, could go lower. Oh, it's a good investment, but not a good trade. What we're really talking about here is there's like a lack of setups. And that's kind of the start of every trade. There's a lack of setups here. And that's just because the market's been so dang chaotic. And so here, yeah, I think it's going higher. I think it's going higher from here, but I just don't know. I just don't know how much higher by the way it's trading. You got to look at 62 as a pretty solid resistance level here. And I don't really know anything about Halo's business, but this is a sloppy chart. I think, frankly, I'd pass on it and just watch it. Randall, on these charts, you see opportunities to short, to put on bear call spreads. Yeah, I actually see a lot of them. And I'm going to have Andy come in next Wednesday and we'll be talking about those. Okay. So yeah, good question. Um, did not sell Tempest mess. I get that. I mean, that's happened to me before too. I don't know. We got to see if Nancy and Paul can pump this stock more. Um, hey, this is a busted stock, so um, don't really, don't really know what to tell you about that, James. And then, yeah, Palo Alto. I just went through this. So this has given us a nice rebound here. Is it a good buy here? Looks like the drawn down to, yeah. I mean, it's a good buy right here. Okay, eBay. No, it doesn't seem affected by market events. I don't. I'd have to think about it a little bit more, but when I think of kind of consumers, stuff like that, and eBay, is a retail, um, I think these days about tariffs, but I don't know that that impacts eBay's business. I could be wrong, but yeah, this is definitely kind of bucking the trend. It's been really, really choppy here, but the uptrend's intact. If you want to own this stock, you just got to be willing to just ride these kind of steep and sharp sell-offs. It's like 15% from one way to the other. Okay. Um, let's see. Um, can you guys see the questions that people ask? Because I don't mind you doing that. I don't know what the setting is on that. So I'm just going to take 3 or 4 more questions. I'm going to try to bang through as many as I can. And I'm really glad it's really, really cool to see all you guys here. Okay. So eBay already has UNG. Um, yeah, like this has a really, really nice turnaround here. I do not know anything really about the natural gas markets. I hear a lot about it, um, but I don't really know that much. But I know this chart pattern. This is a nice turnaround. You could say this is a pop out from a base. I think as long as this continues to ride along the upper Bollinger Band, this is a good stock for you to have. So, yeah, I like this here. Okay. Eli Lilly. This is kind of trapped right now. I wouldn't be buying this stock. It's just kind of trapped. Um, okay, UBS popping up. Yeah, some of these banks are doing pretty well. Um, Starter position. Yeah, I think so. I mean, it's gappy, and that's because it's an ADR. So it trades overseas, and then the market opens up, and oh my God, this has jumped. But yeah, it's back at the 50-day moving average. Nice uptrend, sure, as long as you got kind of a longer time horizon. Okay, JP Morgan, you bought in 2023. Well, quit bragging. Um, should I take some off? I would. Um, I mean, you got a really, really nice profit here. No, I don't care where you bought in 2023. You got a really nice profit, but you have given from the exact high. You've given back 13 or 14% of the theoretical profit if you just sold everything. But just about the time. Think about this. Just about the time that you say, oh my God, I got to take this off the table, that's when this is going to bounce. So JP Morgan's going to continue moving higher. But the way I look at it is this: if you're asking the question, then you should probably take a little bit off. But good trade, good hold, good patience. Love that. Okay, MRX. Yeah, I was looking at this earlier. This has had some pretty significant swings. Um, Yeah, I looked at this earlier today. I didn't see this bounce. All I saw was this part of it, and it looked pretty ugly. So, frankly, the way I see this trading now, my bet is this is going to keep going up. It's this IPO. It's a really strong IPO. Heavier, we'll get double the volume today. My bet is this is going to continue to go up, probably another 10% or so. Um, and then chart industries, no, you don't want to. This is rolling over. I wouldn't be buying more. I know you say you own some from lower, and that's great, but you don't want to add to a don't add to a position. I don't care if it's profitable or losing. Don't add to a position when the pullback here is clearly in process. I didn't explain that exactly right, but Transmedics looks like it's kind of in a base for a mid to long term. You're probably going to be hanging on to it for a while. It's still in a basing pattern. Remember, we ultimately just want to own stocks that are in phase two markups, um, base, markup, distribution, markdown. Okay, so this is just still in a basing pattern here. So, okay, so yeah, you can't see questions. In the future, I'm going to have, because I know we can do this setting. In the future, I'm going to go ahead and try to get the settings so that you guys can see what other people's questions are. I think that's probably a good way to go. So, anyway, um, let's see. Okay, so I'll just ask you. Um, You see all my guitars. Um, so does this work for you guys for the strategy session? You feel like you got kind of um, a good handle on what's going on? Okay, that's cool. Really glad. Now, the thing is, again, the most difficult thing for traders to do, particularly when we've been in this big bull market where a lot of people are making money, and hopefully you were, what happens is the market rolls over and you just kind of want to get that feeling back. Your trades aren't working, you're taking losses. But you just remember because it's not that long ago, a month ago, 2 months ago, 3 months ago, you remember what it felt like when you were making a lot of money. And so you keep trading and you keep trading, hoping to get that feeling back. And all you're really doing is just kind of giving your money away. And so, my humble suggestion is that you trade less, a lot less. And so, I don't know how many newer members are here. I mean, we've got some people that have been here longer than I have been, it seems like. But what we do here at Stock Market Mentor is I'm not trying to this ain't a casino where I want to keep you on the floor with the flashing lights and the free drinks and all that. And I know there are um, other people in my business that they just got to be giving you trades all the time. And I see the reviews on Reddit and wherever else. This is not what we do. My focus is on you, not on your money. Okay. If I'm doing my job, you're going to continue to pay your subscription, and I appreciate it. But if I'm just leading you down a path of just hyper trading when the market's not favorable in that way, I am absolutely screwing you in a big way. I'm taking advantage of you. I'm taking you for granted. I'm insulting you, frankly. And that's not what that's just not who I am. Somebody posted today, I forget, uh, yeah, I kind of remember who it was, posted today, like, you know, the job's not working real well or this or that. But thanks to Dan and Scott, I've built a really, really nice retirement account. You can see the post in the forum. When I see something like that, it makes me feel really good. Makes me feel like, okay, um, my business is doing what I've always intended for it to do. And I haven't said this in a long time, but those of you that have been around for a while, probably remember me saying, my goal for Stock Market Mentor was to build the kind of website that I wish had existed when I first started trading. And I've always held to that kind of one sentence mission statement. And I'm staying true to that. And so that's what we're doing here. And this is the kind of time in the market where I'm not pounding the table and saying, hey, man, let's go buy some stocks. It's more like, guys, relax. It's March. We got a whole year ahead of us. And after two 20% plus years, this is not going to be a massive bull market. I'm just telling you. I don't think it will be. I think, and you just think about it from a change of the administration from Biden to Trump. Um, Anybody who's expecting like, oh, okay, oh yeah, I'm optimistic. Boom, we're going straight up. That's not going to happen. The economy and everything that goes with it is like this big, massive, massive super tanker that's overloaded. It's just really, really heavy and really, really slow. If there's going to be a turnaround in things to make it kind of a more business friendly environment, et cetera, it's going to take a while. It's not going to happen with executive orders. It's going to take a while for the wheels of government to kind of churn and put this economy and put the global markets on a better footing, if that's going to happen. I'm not going to say because I don't want to piss off um, probably 45% of people. So I'll just say this: it's going to take a while. It's going to take a while. And that means that the market's going to take a while. So, one of the things that, and this is why I'm bringing Andy on next Wednesday, one of the things that you can do, and I know there's Chris Rizzo, who's been a long time member. He does this. You can make really, really good income selling options against stock. Um, where you're actually taking a sideways crappy ass market like this and just turning it a little on its ear and turning it into kind of a money machine. Andy and I will be talking more about that on Wednesday, and you'll get some good tips as far as how to do that, because I want you to keep making money. I just don't want you to start losing money. Okay. We're moving in the opposite direction. So, all right. Are we good, guys? Everything good? Okay. Have a great Friday. I will get this out to you guys as soon as I can. All right. Have a good one.